Are you worried about the dollar's decline and its impact on your investments? If so, you're not alone. The global economy is constantly changing. The value of currencies fluctuates. As the dollar continues to weaken, many investors are looking for safe and affordable assets to protect their wealth. In today's video, we'll explore how holding affordable assets or stocks can help you make money when the dollar declines, based on insights from legendary investor Ray Dalio. With his proven track record of predicting economic trends, Dalio's perspective on the current economic climate and historical trends can provide valuable guidance on how to navigate the uncertain terrain ahead. So if you're looking to protect your finances and potentially grow your wealth during a dollar downturn, keep watching to find out which assets you should consider holding. Ray Dalio is a prominent figure in the world of finance and investing, best known as the founder of Bridgewater Associates, the world's largest hedge fund. He played a central role in growing the firm from its humble beginnings as a small apartment-based operation to a global investment powerhouse. Dalio's investment principles center around analyzing markets like a machine and studying past cases to make optimal decisions based on cause and effect relationships. He also advocates for a culture of idea meritocracy and radical transparency within his firm. Dalio's influence extends beyond finance, and he was listed as one of Time magazine's most influential people in 2012. He has pledged to donate half of his wealth to charity during his lifetime, demonstrating a commitment to philanthropy and social responsibility. Ray believes that the dollar-dominated global order is fading away, and countries less vulnerable to global conflict, such as those in Southeast Asia, will prosper in the coming years. He compared the current world order to pre-war Japan, stating that a global financial crisis and economic depression pushed Japan towards nationalism and conflict with outside powers, primarily the United States. He also highlighted China as the economic rival to the U.S. and identified 2024 as a particularly risky period, given the presidential elections in both the U.S. and Taiwan that year. He recommended investing in affordable assets and stocks as a way to make money when the dollar declines. Ray Dalio examined the real returns of assets in the 10 big countries, dating back to 1900, to determine how investors fared through periods of turmoil. These countries were all powerful and could have been potential winners or losers in the wars. They were all reasonable options for investment, particularly for those seeking a diversified portfolio. Wealth was virtually wiped out for 7 of these countries, including Japan, Italy, Spain, and Germany, at least once. Even those that avoided complete financial ruin had a few disastrous decades of asset returns that nearly bankrupted them. Germany and Japan, 2 of the great developed countries that seemed like sure bets to win at certain points, had much of their wealth and many lives destroyed in the wars. Most other countries had similar outcomes, even those that emerged victorious. But first, why is the dollar declining? The decline of the US dollar has been a topic of concern for some time. There are various factors contributing to the decline in the dollar's value. One view is that the creation of enormous amounts of debt and the monetization of that is having an effect on inflation. Another factor is the increasing internal conflicts in the country, which has led to populism of the left and right due to the large wealth gaps and values gaps. Finally, the rising of a great power in the form of China and the relative decline of the United States and the conflict between different forces is also contributing to the decline. Ray Dalio has studied the last 500 years of cycles and observed that there are not just patterns, but also cause-effect relationships. When there is a great power rivalry, economic wars, such as sanctions, are common. The internal conflicts during World War II also produced struggles that brought down 4 democracies during that period and made them autocratic governments. By seeing these patterns and cause-effect relationships, one can better understand the current situation and make better investment decisions. Resource allocation is also shifting to more ideological or political resource allocation. More issues such as trade restrictions are being implemented, and there could be foreign exchange controls and other measures in which resources are allocated. Due to this environment of much greater conflict, countries are becoming more self-sufficient and independent, which is having a negative efficiency impact on the economy and contributing to inflation. The story that happens over and over again is the cycle of a new world order being established over a fight by two opposing sides. Once one side wins, which raises living standards. However, this leads to increasing indebtedness and wealth gaps. And when the gaps become larger, it creates differences in opportunity. This leads to more speculation and the development of a reserve currency, which becomes the dominant economic power in the world, leading to the largest trading country. Indebtedness levels start to rise, and this leads to a situation where there is an over-indebted situation and hard money is lost. This means that there is not enough money to pay for the debt. The choice is made to print more money. These larger wealth gaps and values gaps also produce a greater amount of internal conflict. As countries become more self-sufficient and independent, it is leading to a global shift away from the dollar. China is leading this shift by creating its own digital currency and establishing trade relationships with other countries. This shift away from the dollar as the world's reserve currency will continue to put pressure on the dollar's value. The United States' economic policies are also contributing to the decline of the dollar. The country has been running deficits for years, and its central bank, the Federal Reserve, has been printing money to finance these deficits. This is causing inflation, and the value of the dollar is declining as a result. Furthermore, the United States' geopolitical policies are also having an effect on the dollar's value. The country has been involved in conflicts and wars for years, and the cost of these conflicts is having an impact on the country's economy. The global perception of the United States is also shifting, and this is having an effect on the dollar's value. The rise of digital currencies is also contributing to the decline of the dollar. Bitcoin and other cryptocurrencies are becoming increasingly popular, and some are even being used as a reserve currency. As more people adopt digital currencies, the demand for the dollar will decrease, further putting pressure on its value. According to Dalio, we are witnessing a disregard for the rule of law and an increase in international conflicts, resulting in a division of the world into opposing sides. The ongoing situation between Ukraine and Russia is an example of this trend, where it is becoming clear which countries are aligning with one another. Throughout history, major conflicts have been characterized by alliances on both sides, as seen in the Allied and Axis powers during World War II. Observing these patterns allows us to anticipate future events, such as the possibility of economic sanctions or foreign exchange controls being imposed on China. By connecting the dots and comparing current events to historical patterns, we can make logical predictions about what may happen next. Investors who are concerned about the impact of a declining dollar on their investments may want to consider Ray Dalio's concept of affordable assets. Affordable assets that will make you money when the dollar declines. Have you ever heard of affordable assets? Well, these investments are considered a great way to generate returns without breaking the bank. Ray Dalio suggests that these assets are especially important during a dollar decline, as they can help preserve wealth and even generate profits. One of Ray's favorite affordable assets is gold. This precious metal is a safe haven investment that tends to hold its value during economic uncertainty. Additionally, silver is another affordable asset that Dalio recommends. Although it's a more speculative investment, silver has the potential for high returns under certain market conditions. But it's not just precious metals that Dalio suggests as affordable assets. He also recommends a few stocks that can perform well in a declining dollar environment. One such stock is Cisco Corporation, a tech company that provides networking equipment and services. Another affordable asset is Starbucks Corporation, which operates a global chain of coffee shops and has shown steady growth over the years. Surprisingly, Dalio also recommends Coca-Cola as an affordable asset to hold in a declining dollar environment. Warren Buffett famously invested in Coca-Cola shares and saw significant return, as the company has a strong global presence and a loyal customer base. Other affordable stocks that Dalio recommends include HCA Healthcare, Procter & Gamble, Johnson & Johnson, PepsiCo, and Walmart. The reason these affordable assets are likely to increase in value when the dollar declines is because they are generally seen as tangible assets or stocks with strong fundamentals. In the case of gold and silver, their value is often seen as a hedge against inflation and a safe haven during times of economic turmoil. The recommended stocks all have strong brand recognition and business models that are likely to remain profitable even in a weak economy. For example, healthcare services such as those offered by HCA are always in demand, while consumer goods companies like Procter & Gamble and PepsiCo have a wide range of products that can weather economic downturns. Ray Dalio recommends iShares Core MSCI Emerging Markets ETF as an affordable asset that provides exposure to companies in emerging markets. These markets are expected to experience significant growth in the future due to the increasing middle class and evolving consumer behavior. He also recommends other affordable assets such as Vanguard FTSE Emerging Markets ETF and Walmart Incorporated. These affordable assets are likely to increase in value when the dollar declines because they are less affected by inflation and currency fluctuations. They can provide a steady stream of income and act as a safe haven during times of market turbulence. By investing in affordable assets, you can diversify your portfolio and reduce your risk. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.